You guys ready to go? All right, welcome to Forex.Today, the YouTube community. 20,000 foreign exchange traders. Holy smokes. Thank you for being part of this community. I think we make the world a better place every single day. The raison d'etre of our organization is to conduct technical and fundamental analysis. Why? Why would you want to do that? Well, in the opening of my book, I say, hey, well, planning your trades helps reduce risk. It helps you reduce stress. Maybe, just maybe, it improves performance. Because if you add your randomness to the chaos, it's hard to get consistent results out of that. So if chaos is going to be chaos, then you must be the one that behaves consistently. It seems logically, and it seems like logic, right? If you add chaos to chaos, you're not going to get consistency. So at least you should behave consistently, right? So anyways, that's what trade planning is all about. Probably will keep you out of trouble, and maybe it'll even put you into better trades. Who knows? So thank you for being here. Ask questions. Let me know how you can help or how I can help. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, it's going to be a good day today. I got my lucky Tom Ford glasses on. That means today's going to be good. That's why they're so expensive, because they bring you good luck. Or at least they bring Tom Ford good luck. You hear he's going to go IPO and he's going to put a couple of billion in his pocket? Good for him, man. Anywho, let me know how I can help. I'm a currency trader just like you. I love technical analysis. I love scalping. I love spot trading. But I also like swing trading, position trading, portfolio management. It's all awesome stuff. They all require they all need to work together. The higher up you go, the more you need to know everything else. Like if you're a pure scalper, yeah, you probably need, price action. That's it, right? You got it. And that's cool. Especially during the summer. That's the right thing to do. Cool, man. But as you go up the value chain, so to speak, by the time you get to portfolio management, you need to know how to do everything on all time frames. And you're going to need to know how to predict the future. And how do we try to do that? We try to predict the future by gathering intelligence and formulating a strategy around a bias that you formulated by gathering facts, like the true facts. We found out that the UK today has a lot more inflation, right, than what most people thought. And the Bank of England's going to have to raise interest rates even higher. Oh my gosh. Well, that's new information that is relevant to trying to predict the future. Will the Bank of England raise more interest rates, and raise interest rates higher than what was priced in? And if so, how will that impact the value of the pound? We also learned a lot earlier, like last week or over the weekend, the Chinese economy and how it's doing. And so once again, you have to update your bias. And then you carry everything out. It's pretty cool, man. What we do is pretty cool. Okay. Mubarak says, hey, besides credit cards, how can I pay? I guess you can't. Sorry, man. What are you trying to sign up for? Go ahead. Let me know what you're trying to sign up for, Mubarak. Okay. Anywho, so we gather intelligence, formulate a strategy, and then we carry out our tactics, right? And the tactics are the smaller time frame, let's say 4 hours or less. Trading, right? The actual kicking down doors. Cool. So there's a lot to learn. There's a lot to do. There's a lot to contemplate, as well as our own psychologies and emotions. Wow. So again, let me know how it can help, because I've been doing this a long time and I've certainly made a lot of mistakes. And I can maybe at least help you try to avoid some of them. There's resources available to you besides these free live streams every day. And by the way, if you do enjoy the live streams, I hope you subscribe. I'd like to get 100 million subscribers and take over the world. On YouTube advertising. So anyways, subscribe so I can help is basically what it comes down to. There's also, you'll find a link in the description below to my book. You'll find a link to fxbootcamp.com. 65 hours of training for $88. Yeah, $88. It's not a typo. Is it worth $888? Yeah, for sure. But it's only $88. Don't even need a coupon code. Okay. And there's a link to tradersway.com. Hey, do you want an ethical, trustworthy foreign exchange broker that has fast execution speed, narrow spreads, and huge swaps, world-class customer service, and above average good-looking people working for them? Is that what you want in a foreign exchange trader or a foreign exchange brokerage firm? Well, that's what I wanted. Tradersway.com. I recommend them. Open up a demo account, see if they can earn your loyalty and respect. Johnny's like, hey, man, retail sales. How about that? Oh, all right, cool. That's good. Yeah, now I got it. Thank you. I was saying, Johnny said retail sales are relatively flat. You can also look at Target and Home Depot and Walmart. They've all reported. You can get your own retail sales figures. Is it true? I don't know, maybe. See, retail sales will fall if gasoline prices fall. Okay? Did you know that? It's interesting, isn't it? Gasoline prices fall by 25%. And that can have a negative impact on what you would consider retail. You're like, well, Walmart, Amazon, maybe, huh? Home Depot, that's retail. But we forget about gas. And, you know, how many Americans went to a Walmart in the last 3 months? But how many Americans went to a gas station over the last 3 months? Right? And so anyways, most Americans put gas in a tank. And so we have to count that. Also, you can start breaking this apart. Walmart might be different from Target. But is Target different from Louis Vuitton? Louis Vuitton sales are way up. Sucks to be poor. Inflation hits poor people harder. So like we learned in the UK that food prices are way up. That doesn't hurt rich people. Sir, you're going to have to pay $3 more for your lobster tail. You know what? You want another example? If you're in the Hamptons, you can go on the new Dom Perignon cruise ship for a sunset cruise. It's 4 hours. You go out to sea, you watch the sunset, you have some sushi by a three Michelin star chef, drink some champagne, and do some dancing. What does that cost? Does anybody know? You're like, hey guys, it's beautiful here in the Hamptons. Let's go for the sunset cruise. You get sushi and you get champagne. Your customer says $3,000. Anyone else want to take a guess? Let's just say it's a lot more than your guesses. And they have no problem. Yeah, not a problem. Not a problem. No problem. Isn't that funny? And yet we might find out that Target has been slashing prices because inventory is high, because people can't afford their clothes. I would say it's that they're a lousy company. But whatever. Matrix is closer. It's not that much Matrix, but you'd be surprised. You know, most people would spend that kind of money on a car, not on a 4-hour cruise. But anyways, you get the idea that if you're charging, $10, $15, $20, $30,000 for a 4-hour adventure on the sea, some people are not impacted by inflation as much. Okay? So retail sales, Johnny says, is flat, which is true. That's what the report is. But then when we want to figure out where we want to invest our money, you want to consider, is inflation right? Is inflation equally weighted? Walmart is struggling, let's say, based on its historic norms. Not that we're in a recession, but they face high inflation. There's a difference. It costs them more for the truck driver. It costs them more for the gasoline. It costs them more for the shipping containers, and it costs more to hire people. And so they're struggling not to have to inflate their prices, because the whole point of Walmart is to be cheaper than Target and maybe cheaper than the dollar stores. Okay, so interesting, right? But Lamborghini can say, hey, we're struggling with our supply chain. So if you order your Lambo, it's going to take 2 years for you to get it. But if you want it in the next 6 months, you'll have to pay $100,000 more. It's a service, what they're calling. They're not calling it like bribe us. They're like, but we have this program where you could get it for within 6 months instead of waiting 2 years. It's going to cost you $100,000. They actually did this. Sales went up. Oh, my $400,000 Lambo, I can get it in 6 months for $500,000? Yeah, sure. Not a problem. Let's do it. Let's go. Get her done. Okay? So not everybody's impacted equally, so you might want to look around when you think about investing. So here's our pig. Let's take a look at pig yen. Okay, it dropped a little bit in here. and then maybe is stabilizing on this moving average. But let's take a look at the response. Okay. Now, first of all, euro has really recovered, huh? Holy smokes. Matrix says PBS is a great documentary on Walmart. They're vicious. They're vicious. So while we look at the indices, let me see what's on your mind. Okay, you guys are evenly split basically on euro and pound. So we'll zoom in here. This is what we did on the day trading group last night. Is that we were looking for a rollover on the moving averages. If you don't like that point of view, you can do this point of view. Whatever, dude, whatever. And this is our plan. So that's cool. I'm in at 103, a little higher than that actually. And now we're at basically 101.5. And hopefully get a little lower, but you know, hope is not a strategy. We got a lot of support we need to break through. Okay, your customer says euro dollar not going anywhere today. Well, that would show you euro and dollar are, you're right, are relatively strong, or in this case, relatively neutral. That just means they're both either strong or both either weak. Your customer says, I found it. It's from $15,000 to $30,000. Yeah. See, I didn't want to say the $30,000 because I think most people would find it hard to believe that people in the Hamptons spend $30,000 to go on a 4-hour cruise. But this is why when people are trying to raise money, you know, an amateur Forex trader finding success for the first time, maybe a young gun, a young hustler is out there trying to raise money from rich people, and they show up and they're like, we can make a lot of money really quick. And they don't understand the smell of desperateness that comes off of that pitch. When a person that's never had money is talking to a person who has always had money. So like, it's hard to fathom, right? Like, dude, let's go on a 4-hour cruise. It's awesome. We got sushi and stuff. How much is it? Oh, it's 20 grand. Oh, that's great. Let's do it. I was going to get burgers and fries today, but you know, sushi sounds better and I'd love to do a sunset cruise. All right. Come on, guys, let's all grab it. It's only 20 grand. Let's all buy tickets. Let's all go. Okay, yeah, that sounds like a good idea. And you're like, what the are you talking about? 20 grand? It's $5,000 an hour. See? But you're in there going, hey, man, let's get rich quick. You're right? You're out of place, right? You're out of place. It'll come across poorly, literally. It's a poor sales pitch, but then you come across poor, right? So you got to be careful, man. You got to be careful. But isn't that amazing? Walmart is worried about having to raise prices 50 cents. And other people during the same period are like, 20 grand for a cruise? Let's do it. Not a problem. Not even a thought. So inflation is not the same across the board. And so think about it. The way that you treat money probably over the next 5 years as an investor should be thought about differently. Okay? Does a person that is buying a $400,000 car care that prices just went up 25%? No, not really. It's a bitch, but it's COVID, whatever. If I can have it sooner, I'll pay it. That's that. But that doesn't fly at Walmart, does it? Sorry, this TV, sir, is no longer $400. It's $500. Oh, I can't afford that. So think about that when you invest. So anyways, looking at this is what I'm anticipating. Okay. But we have not made the lower low. And of course, what we've been talking about is this is a defense of the psychological level. That's funny, Matrix. Yeah. Yeah, so like that, the sales pitch is important because you need to understand the audience, and it's hard if you've never been around an audience like that. So there's a lot of psychology that needs to go into raising your first fund. Now, your first money will come from friends, family, and fools, right? Your mother's chiropractor might invest. And then you're like, really? Like, Mom, why do you have such a good relationship with the chiropractor? Hey, some questions you just don't need to ask, right? So anyways, your mom's chiropractor / masseuse / boyfriend. Sorry, this is terrible. Maybe he invests into your endeavor, right? But as you go to more sophisticated investors, you need to understand their psychology and their motives. So one of the things we were talking about in the day trading group last night was pitching corporate investors, right? And understanding the psychology of that pitch and how it's different from, let's say, a rich friend or uncle or a wealthy high net worth individual or an institutional investor. They're all different, but pitching a corporate investor is quite different. And pitching a bank versus a hedge fund versus, something else, a family office. They all have different psychologies. They all have different needs. They all have different requirements as far as compliance, corporate governance, risk profiles, duration, endowments. I did a class on endowments at Harvard, and I might be participating in a new endowment that's being developed. And I guess I can't really say too much about it, but they're building up this endowment, and they're going to need some oversight on it as far as how it's invested, because the way an endowment works is, let's say you have $100 million and you make 10% a year. Okay, now you have $10 million that you can use to run whatever your nonprofit is and achieve the mission of the nonprofit. You never touch the 100 million. In fact, what you should probably do is, if you get the 10, maybe you should only spend 5 and keep. Now you have you live on a $5 million budget, and then you have 105 million principal, but that 5 is separated for a rainy day, or if you have a down year, you could supplement that. that bad year. So now you're right. Maybe you only have 3 million to live on, but you had the 5 that you saved. So you can put 2 to make sure you still have your 5, right? There's a way to do all of this. And so when you go to pitch an endowment to manage their money, and I've talked to the investment team at the Metropolitan Museum of Art in New York City, which has the largest endowment for the arts in the world. And I've talked to the Yale Endowment, who has probably the second largest educational endowment next to Harvard, because Harvard's better than Yale. So anyways, so I've talked to these, and so I understand literally how they go about hiring people to manage their money. So Yale has like dozens of money managers, all independent funds. Maybe they have a few for Forex, and you might be one of those Forex people if you pitch them. But you can't go to the Yale endowment, roll in there and like, I can get you rich quick, boom, boom, boom. Look at me, I can scalp. I don't know what's going to happen tomorrow, but boom, 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 I'm a cowboy. Right? On the euro dollar, I ride. Right? Dude, you're wrong audience. But you'll probably have to sit there and talk about macroeconomics. Okay? So anyways, I think it's interesting. Matrix, yeah. So anywho. Learning is so much fun, yeah. Right, Darko. Like when we were talking about a bank, there's a bank charter, for example, and there are things that banks cannot do. And banks have actually 3 different types of money. Okay? So let's quickly look at a balance sheet. Okay? So you have assets, you have liabilities. So if a bank has $1 million in deposits, there's $1 million in cash in the vault. But that's a liability. Because those clients can show up anytime and say, give me some of my money back. And you'd have to withdraw it from the asset and give it. So they're also a liability. So is the bank making any money here? No. Bank's not making any money. Assets are equal to liabilities. So what you have to do is then say the bank has to take some of that and have, let's say, $500,000, okay, in loans. So these are deposits. Okay? So now they have 500,000 in loans. Okay? And then they have 500,000 in bonds. They're allowed to do that. They're not allowed to do much else. Okay, so let's say a year goes by. Same amount of deposits, same amount of assets. Assets and liabilities are different. However, they collected 5% on loans and 5% on bonds. Because they got paid over the course of a year. So how does this work? Because now they have 550 and 550. Actually, I didn't do the math right, but let's go with it. Sorry. Hey, man, just listen. Shh. turn off the inner bitch. Sorry. All right, so we got 550, 550. Just go with it, man. Go. Be free. Relax. Okay. So now what? Did we increase the deposits? No. So on this side, we have bank capital now. On this side, it's not an asset, it's not a liability. So there's $100,000 in this capital. So if Darko was going to pitch a bank and say, let me be your Forex trader, there's no way in hell that this money can be touched. And there's no way in hell this money can be touched. So now the next question, depending on the jurisdiction of the bank, what is allowed legally, but also, right, let's say in the, like legally, I mean like the legal framework of where this is domiciled. So in the country, what does the country and its regulators for banks allow the bank to do with its bank capital? But also the way that the bank set up its own license and business. What did they tell their investors and their shareholders that they would and would not do? Okay? Like bylaws, for example. And what would the board of directors allow or not allow? Right? So there's a lot going into that. And even then, they might say, well, Darko, we could invest into your Forex fund, and it is legal for us to use our own bank capital, which is the profits from doing banking. But inside our let's say, risk management, we allow only 5% of our bank capital be invested into alternative investments. And from there, we can't have just one manager. We have to have a minimum of 5, ideally doing different types of alts. So we have $1,000 available. And you're like, $1,000? Well, I'll probably grow that to 1,300 in the next year, working day and night, of which you'll pay me $60 at the end of the year. You're like, $60 for a year's worth of hard work? There's just not enough money into it, right? So now you're like, well, can I live on $60 a year? No. $600 a year? No. $6,000 a year? No. $60,000 a year? No. $600,000? Yeah. Okay. So then how big does this need to be? Okay. You're like, well, 100,000 won't do it. 1 million won't, right? 100,000 won't do it. 1 million won't do it. 10 million won't do it. 100 million won't do it. So you need 1 billion. And you're like, oh, that bank doesn't have 1 billion. Or it has different structure where you get a bigger pie. So they're like, well, maybe instead of breaking it out by 5, right? You have to then break it out by, so let's say they'd have a different charter and they're like, well, we can only put in, that a certain percentage, but we can give you that whole percentage. And then you're like, well, you don't need 1 billion in bank capital, maybe only 500 million or even 100 million or something, right? And then you're like, well, if I do my job and conservatively invest it and, double or triple the stock market, which is a big promise, like, really most likely if somebody gave you that kind of money, by the time you get paid and cover your costs, you're going to get your $175, $322 a year. And maybe that's good enough for you. Matrix says, be an independent agency and land your own, basically be your own broker. I can tell you regulatory compliance in the United States as a small Forex trader can cost you $100,000 to $200,000 per year, depending on what years you get audited. Because not only do you have your audit costs and your filing costs, you have your net capital requirement, which could be like, let's say you have to have $100,000 in cash just to become a CTA Forex focused on Forex. So you have to have that in cash, and then you got to have this as expenses for reporting and you know, the reporting years, like you have to report quarterly and then annual, and then you have to have an outside firm audit your financials, and then you have to report that. And so, you know, that's only going to cost you $100K. But then on the years that you get audited, then you have to have an audit team and legal and accounting, and they're really pitching in. So now that's going to double your cost those particular years. But then you should probably have a compliance team that you hire to make sure you're within, right? So you got to hire this. Probably need an accounting team or that can do the regulatory filings quarterly. And then there's a subcomponent of your accounting team that would probably focus on just doing your books monthly and your trading results monthly. Right? So you got to track your results monthly because you're going to need that to report to clients and stuff like that. And at some point, especially when you have more sophisticated clients, they're going to say, okay, bring in your audited, you know, track record, right? So you have to hire like KPMG, which is funny. It's just on my head. I was just talking to a partner at KPMG. Anyways, you'd hire them to audit your financial results and from your brokerage accounts and all that kind of stuff. And then a different team would do your quarterly reports and your annual reports. And then your outside team would audit your annual reports that your accounting team did. And your compliance team are making sure your website, your newsletters, really if you sneeze, you probably have to report all of that. And then they would have the regulatory oversight of what these guys are doing. And you put that all in to being a small foreign exchange trader in the United States. Doesn't that sound good, guys? So how much money do you think you need to make before you decide you want to be a professional foreign exchange trader in the United States trading other people's money? We'll get there, Robbie. I didn't say up. I said I wanted it to go up. But we'll go there. I'm very interested. We'll get there. Okay? And the thing is, so if it costs you, if you should budget, let's say, any given year could, you know, in particular on audit years, any given year is going to be 200K. So let's say you average it out and you save the money over a period. So on years it's only 100K, you're saving 150. So if you don't get audited this year and you don't get audited next year, but in year 3 you get audited, you had saved 50 and then that 50, so you might have it. So let's say you do that, but what percentage of that is coming from your portion of your profits? And then your other costs, and then your salary, okay, have to be accounted for. And remember, bad years, you get paid less. Bad months where you lose money, you don't get paid. Then you got to get back above your watermark. So you have one bad month. It might take 3 months before you get paid again. So now you got to save yours. So what I'm getting to is, at some point, you need to have a lot more money. Money. Okay, you got to have a lot more money. The secret sauce to Forex as a professional is assets under management. But notice that even when you get to bigger assets under management, you get, right, more money, more problems. You understand? So therefore, you got to learn the pitch too. You got to learn the pitch. You have to know your audience and their needs and desires. And when you're getting to that level where, you need to make $500,000 a year so you can pay yourself enough salary, save for retirement, and pay all those other expenses. So like your business is getting paid $500,000 a year, but you're only bringing home 200, right? Then you're like, well, if you were getting paid 20% to earn the 500,000, how much money do you got? And then when you get to those ideas and numbers, who can give you that kind of money and what are their needs? Because I don't want you to focus on getting rich, because don't worry about it. It's going to take longer than you expect, but it's going to be better than you can imagine. So you might as well just focus on creating value for other people. I believe successful actors in Hollywood didn't make decisions based on how much money they're going to make. Now, some of them, you got to do a movie once in a while just to earn it. But I think the best actors probably ended up making a lot of money. And then once they're hugely successful, people are willing to throw money at them and they're like, but I'm an artiste. So I think if you think about getting rich quick, you just won't make it. Even if you're a good trader, once you try to start raising assets under management and you bring that mentality of getting rich quick, it'll reek. It'll be like toxic sewage. People will smell it from across the room and you're already doomed. It won't work. But those that come across of caring and having passion and having professionalism and having drive and accountability and reliability, those people are loved and admired. Okay? So get yourself there. Okay, let's skip over. We'll skip over. Somebody said, hey, dude, you said oil was going up and it went down, right? I'm not sure if you were saying that, but let's be clear. And by the way, I don't believe I've ever been unclear. Okay. But I am a bull on oil. Yep. Okay. So let's make sure, right, Robbie? I am a bull on oil. Absolutely, totally for sure. Is this chart bullish? No. So how much do I want to trade? Well, I can scalp this all day if I want. But none of it would be, okay? None of it would be part of the strategy. It's kind of like portfolio management in the sense like you want to get long on this, but you also need to make money. So you can piss around and short it all you want, pick up some pennies, but it's not the point. It's not the love. You're simply waiting. Okay? Now, I talk about this every single day in my day trading group, and I believe I talk about it every single week in the swing trading group. Okay? And so one of the things I was very, very clear about is that I want this to go up, and it is going up, and I still don't want to buy it. Okay? So then we went through what I considered at that time the obvious, and I marked all of these out. Marked them all out. And we talked about sell orders. So I'm like, hey man, I'm really glad it's up. I think it's going to go up. I don't think it's the right time of year. And I'm not sure why, because I'm looking at things like fundamental analysis. Not of the oil market, but fundamental analysis of the flow of capital. How do I manage fundamental analysis of the flow of capital? How do I do that, ladies and germs? Type in a question mark if you don't know. Yeah, Johnny nailed it. Commitment of traders report. So I track that every week. And I'm like, okay, well, I see this going up, but actually positions long and short are coming out of the market. Why? Dude, it's the middle of summer. Like, what do you think? Nobody's trading. Okay, cool. So I'm like, so where's the resistance? So I mark out a whole bunch of them. Somewhere in there, I would expect this to come back around, which is totally fine for me, because what I was waiting for is a double bottom, higher high, higher low, and these areas are now support. I don't have to buy it at 87 to be a hero. I can start buying it at 95. Don't worry, because I think it'll go to 150. So don't worry about it. It's okay. Oh, you could have bought it $10 cheaper. Nobody will say that to me. You understand? So I wait. Now, we might have new news. New news like China's slowdown, right? So that China demand, that's a demand part, demand. Now we're talking about the Europeans now, because they're so desperate. By the way, Europe, it's your own fault. Because they're desperate, they want to work with Iran. That's a supply issue. Increase in supply, decrease in demand. That brings price down. Okay. Did we know that 2 weeks ago? No, this is new. It's newer information. So feed it to your model, right? Feed it to the machine, right? Machine learning. Just feed it to the machine and see how the fundamentals change. So it'd be interesting, at least, to start seeing something like that. Also, I predicted next week would be the more interesting week, not this week. I'm not ready. I'm not ready to rebuild a portfolio. Maybe next week, maybe the week after. So let it develop. Let it do a double bottom. Then let it make a higher high. And then looking at the COT again, when positions increase, I can see, are they buyers or are they sellers? Because I look at net long and short positions in the actual marketplace by large institutions and by retail traders. And right now, these moves I see are fundamentally retail. You understand? Fundamentally, this is retail traders trading. Now, some of that is like big retail, meaning some, maybe not, the guys with $5,000 accounts are making money in here or losing money. But there's also like multi-million dollar accounts hustling in here too. But it's the ones that are not big enough to report. Okay? The ones that are big enough to report. So now think of like truly institutional investors that are dropping, on one position, drop 10M on this leveraged, right? Drop 20M on this. Boom, right? They're bigger. They're trading this too, but the institutional traders are on vacay right now. They're not in. Those that were bullish have exited. Those that were bearish have exited. So part of my job is to say, well, whether it goes up or down is price action inside of a non-fundamental move. But in the next, I'd say in 3 weeks, volume will be way higher, way up, way higher. And I can say, well, let's say if volume doubles in the next 3 weeks, is 68% of that new volume long or short? Do you think that would be relevant information? It's a yes or no question. I don't believe maybe is the answer. Do you think if all the money that left the market comes back to the market, doubling the current volume, and clearly one side is right, so this is bull or bears. So let's say if 68% of the new money and large volumes of new money are short versus long, do you think price is going to go up? No, dude, it's going down in a blaze of glory. Okay? Absolutely, right, Matrix? Not this maybe. Come on, OD. There's no maybe. Maybe sounds like a trader trading in the middle of a range. Okay? Well, Darko, it depends on how they're playing it. So remember, they're in futures contracts. Okay? Not necessarily spot like we're trading, because that's what we're tracking in COT is not spot, but right, futures and forwards and stuff like that. But anywho, what I'm trying to say is, yeah, this stuff matters. It does matter. And the thing is, if you didn't even know any of this, like you just see candlesticks and you're like, prices, all the information's in price. Bull hockey. Bullshit. Bull shallots. How about that? Bull shallots. Because this just shows up and down. It's not showing, well, maybe you're tracking volume. Historic volume or overnight volume, right? All that kind of stuff. I'm sitting here going, Yeah, you know what? The next 2 or 3 weeks are going to be really important because I want to see the position of institutional traders, whether they come back to the market long or short, and then I can trade with the institutional investors because I'm a trend trader and I want trades that last more than 30 minutes. I'd like trades that last 30 to 90 days. Because one thing I know is you got to let the winners run. And I need institutional investors to be my friend, not my foe. Boy, is that a joy and pain thing? Was that Milli Vanilli? No, Rob Bass. We used to be friends, but now we're foes. Ask me why, man. No one knows. Could be jealousy between you and me. Could be the fame, could be the money. My God, where did that come from? Joy and pain, sunshine in the rain. Okay, so anywho, I'm a bull and this is making lower lows. Do I buy lower lows? Niet! Original? Well, what's your assets under management? If I gave you $1 billion, would I expect you to make 20 million a month? Yeah. It's all a percentage. Yeah. Yeah, Matrix got it. Yeah. Okay, but remember, those, again, $1 billion fund is not going to think like a retail Forex trader. Okay? So I do know a Forex trader who is talking to people with that kind of money. Okay? More than that, in fact. Whatever. Doesn't matter. The matter is, what does that kind of investor want from a Forex trader? Not a mindset of a retail trader. They're very risk averse. They're incredibly risk averse. They're unbelievably risk averse. Why? They're not necessarily doing it for the money. They already have money. Oh, why? Why would they invest? Because you're smart? They already have smart people. Why? You're good looking? Dude, when you make good money, everybody's good looking. They're trying to provide a value. And everybody is concerned about risk. Risk. Nobody says, think about it. Nobody asks, what kind of money can you make us? Hey, if I give you $1 billion, how much money can you make us? It's not even a question. Nobody asks a question like that. They'll ask you 1,000 questions about risk, but they'll never ask you, how much money do you think you can make? Well, what if I give you $2 billion? Right? It's so opposite of what I think, YouTube Forex traders think about. So the message is, I want you to think about your own trading that way. And in the beginning, when you ain't got no AUM, you're going to have to take more risk, but that's the most dangerous part of your career. So what I advise people is to pretend you already have $1 billion and start trading risk averse from day one, so that as you get better and your track record improves and pretty soon one day it's good, you have something to show somebody, a track record that doesn't stink of desperate gambling. so you could get rich quick, because you'll scare off all your investors. So just trade conservatively with discipline and patience and with long-term planning and real strategy. Like, think about it. When you give your track record, it's most, like, an institutional investor just doesn't look at the same numbers that I think a retail Forex trader is thinking about. A retail Forex trader would go straight to what percentage of your trades are wins? Why do you care about that? Oh, well, because 90% of my trades are winners. Yeah, which tells me you don't know how to take a loss, tells me you're a risky trader. You're so concerned with what your winning percentage is. You're not concerned about return, and you certainly will probably ride out a losing trade to maintain your winning percentage, and then you'll probably get out of all your good trades quickly because you're concerned about your winning percentage. Like, dude, it stinks. If you think that way, it reeks to an institutional investor. Their number one thing is, do you know how to take a loss? You say, well, 90% of my trades are winners. And they're like, we're out of here. We're not interested. Pass. Because you don't know how to handle a downside. You would risk our money to maintain your stupid winning percentage, right? That kind of stuff. But also, you might trade anything. And then someone might look at it and like, we don't understand the fundamentals here. We're institutional investors. We understand macroeconomics. We understand what's going on in the economy. We understand what's going on with monetary policy. And we look at your trades and it's gobbledygoo mumbo jump. It's like you make it up every day. And you're like, well, actually, I do make it up every day. Well, how do you give a sales pitch about that? Once again, you're out. Never had a chance. But if somebody looks at it and you're like, oh, yeah, we see this during the energy crisis. Man, you sold off pound, you sold off euro. Okay? Oh, we could see that. And why? And then you explain it, right? Why did you do this? Well, I was tracking the flow of capital. These economies were getting crushed because of the challenges that Russia presented when they rolled into the Ukraine. And so I looked at nat gas, I looked at oil futures, I shorted euro, I shorted pound, I looked at Norway, I looked at CAD, I looked at Aussie, and all this kind of stuff. And we're tracking the flow of capital, and then as commodity future prices came down, we kind of scaled out of some of these things. And through the summer period, our volume and volatility went way down because we expected more of a sideways market with lacking direction. And then volume and volatility picked up in September, October, November. Yeah, as those markets came back, and then we had to restructure things with the risk due to the election in November, on November 8th in the United States. And an institutional investor would look at your track record and like, I totally get what you're doing here. This totally makes sense to me. What do you think about next year? And then you can respond intelligently about that. Oh, well, next year will be much different than this year. Let me explain why, the 3 risks that we see and the 3 opportunities and what we're going to do to carry them out. And all of a sudden, now you're talking legit. Okay? But I want you to, I'm trying to get everybody. Okay? Like, I'm not beating anybody down. I'm not saying like scalpers are terrible people. What I'm saying is you should know that and a bunch of other things too, and that you should develop a framework around your trading and your trading style and even your trading results so that someone can look at your history, literally look at the trades. Euro short, euro short, euro short, euro short. Now you might be euro short and, again, you might be like euro Aussie short, euro CAD short, euro Kiwi short, euro Norway short, let's say, and you're consistently doing that. What does that say to somebody that's analyzing? That there's like a theme. It's a thematic trade. Why? Macroeconomics. So like a concert pianist can sit down and read sheet music and hear the music in their head. Dun 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 dun. Dun 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 dun. Right? Like, you're like, oh, right? It makes sense. Your track record should, to an institutional investor who is smart and intelligent and educated and experienced, could say, oh, I see what you're doing here. You're short euro, short pound, long commodities. Got it. Makes sense. But for you to trade that way, you're going to need to think that way. And for you to need to think that way, you're going to have to, get bigger in your understanding and knowledge of Newtonian physics. That's my view of the world, is a Newtonian physics view, mindset, which means everything is interconnected. Okay? So when I see the stock market go up, I got 9 trades I can do. When I see the stock market go down, I have 9 trades I can do. Because they're all interrelated, so I only need a certain amount of information to say, well, if this cog goes down, right? If this one turns this way, this one might turn that way because there's another one in the middle. This one turns and this one turns and then that one turns. Okay, I can guess where the hands on the clock are going to go next over time, right? The pattern, I can guess. Because I know one goes faster, one goes slower, one goes really fast, one goes medium fast, one goes really slow, and I can anticipate when they all connect at the top. Midnight? They all connect 6:30 and 30 seconds at the bottom. Okay? So it's understanding the connection and the patterns. So like you could even scale that idea out of me saying I can guess when all 3 hands on the clock are going to be at the 12th position. I can guess at when all 3 hands are at the 6th position. Okay? Imagine you're trying to do things like a 50-year trend, okay, and a business cycle. A 50-year trend of GDP growth, 2.2%. That's a fact, by the way. And that there's business cycles in which things like growth peaks and then growth hits a trough. And that all we're doing now is like, so this is separated in economics. We call this potential GDP and actual GDP. And you can track both of these cycles and figure out when you're at peak and when you're at valley, and when you're starting to do things like fill the productivity gap, or, right? Or inflation is likely to start picking up, and then anticipate what the Fed's going to do, and then position all your portfolios in between all these things. See, in this period, let's do this in a different, right? In this period, oops, come on now. No, mouse is messing with me. Wow, look at that. Mouse is really messing with me. All right, just in this period, left, right of center, there's probably stuff you should be doing with your money. Okay? Doing a different color now. There should, in this period, left of center, there's probably something you should be doing with your money. And the Fed is doing different things in this period. Then you have a productivity gap. So let me redo this in a slightly different color. You fill the productivity gap, and then you have an overproduction period, and then a new policy coming in. So you got to do this yet another color. Okay. So you have to understand those two concepts of the clockwork. They're both cycles. Okay. Okay. And so it would be ideal if you're going to if you've just realized that you need to get bigger in your process of managing your firm, okay, you need to understand some of these concepts, because now we're planning ahead and we're thinking about where we are and what the future is going to be like. Are we here? Are we here? Are we here? Right? Well, Felipe, I stay away from the yen because it's heavily controlled by yield curve control. It's heavily influenced. It's heavily manipulated through yield curve control and not pure fundamentals. Okay? Matrix says separating a track record from when you didn't know to when you did know is a big, is a difference in trading behavior. Yeah. Well, I can also tell you that when you do sit down with an audit team, so let's say someone says, yeah, we want to invest, but right. And then that doesn't mean they give you the money. They're like, yeah, we're interested. This is really good. We want to invest. And you get all excited and they're like, well, we'd like to test you out 2 million. And if things go well over the next, 6 to 12 months, we'll bump it up to 5. And then maybe next year we'll bump it up another 5. You're like, $10 million. You can just smell it, right? You can smell the money. Now that greed kicks in. You're like, oh, I'm going to have $10 million. And then they're like, but first we're going to send in our audit team. And you're like, wait, what? We're going to send 5 fellows over to your office, and we're going to go through all your trades over the last 5 to 10 years. And by the way, they don't like you. They want to say no. They're going to find all kinds of reasons to say no. You're like, really? That doesn't sound like fun. I want to say yes, but I've asked them to find me reasons to say no. They go, oh, that doesn't sound good for me. When do I get my yellow Lambo? Right? And one of the first things they'll do, Matrix, is they know like black swan events. They know the days that you should have been punished. Not because you did something bad, not that you did something bad, but the market just punished people. They know the bad days. Everyone had the same bad day. And I heard a story where someone was doing a pitch, and this happened. He had a great track record of success. And they didn't look at any, because look, I'm telling you, people are not interested in your high returns and your high success rate. It's the wrong, again, nobody cares. So they're looking for how do you perform when everything goes bad? So they got this huge track record, 10 years of track record or something, right? And they went straight to the point where they know all their other managers had a horrible day because some unknown event occurred. And if you were positioned properly, you got crushed because the market reversed instantly and there was huge drops. And people really, it was a really bad day, especially if you were doing things right. And so they went to his track record, and guess what? Oh, for some reason, those trades were omitted. They weren't there in his track record. That was it. It's better for you to say, well, I didn't know that Russia was going to attack the Ukraine. I saw the buildup, but I didn't think it was a real threat. So I was short oil, and then it happened and oil spiked. And dude, I was just kind of blindsided by it, but I took the loss. I got out of those positions pretty quickly. And over a course of months, kind of rebuilt slowly the account. because I didn't want to like respond reactively to what was happening. I was more concerned about keeping the powder dry and building back value while keeping risk low. And you know what? You say that to somebody, that you admit that you got punished because of something that was surprising in the market, and then you responded conservatively. You took the loss before it was terribly painful, and then you slowly rebuilt it while keeping risk low and not gambling or reacting. Dude, you're freaking hired. Get on board, man. Okay? And the other person that tried to hide it, the audit team was done. They looked at one day out of 10 years, found that one day they expected to be horrible. The guy didn't report a bad day, and they left. Because everything else is shit. They want to know how you handle the bad times. Okay? You had 47 losing trades in a row. How did you handle that? Was the 47th one 10 times bigger than the first one? It smells like gambling to me, bro. I can make it back. Well, that's not the right way to make it back. No, you're like 47 trades in a row, dude. The account would be bankrupt. Yeah, you're not hired. You can't survive 47 losing trades in a row? Yeah, no one's going to hire you. You're over leveraged. You're taking too much risk. People don't want risk. They're looking for you to have risk in your portfolio, and if you do, they're not going to invest. Your lot size is way too big. What are you doing, son? Oh, I'm trying to make a lot of money quickly. Well, you're not for us. Good luck. Why is the pound bullish today? Inflation was higher than anticipated, and the Bank of England will probably need to raise interest rates higher. The higher interest rates increases the value of the currency. What do you think, Simon? Smell like a plan? All right. I got it. Let's we can break the pound down. Why not? Let's break the pound down. Let's break it down. First of all, I got to do commodities are weak right now. So let's do this one. Okay? By the way, why did I draw all these horizontal lines? I tried to represent support. So do you remember yesterday? We were here. Do you remember when I did this? That was terrible. So let me do it this way. We were here yesterday. Okay, this is the open. Okay? Do you remember what I said yesterday? It seems so far away. But these plans are here to stay. You guys remember this? Was it here? Maybe I did it in the day trading group. I think it was here, though. Okay. Higher high. And I said, you need to plan for the higher low. We did, right? Yeah. And I said, look, now that it's made a higher high, you need to plan tomorrow's trade and figure out where the higher low is going to be. Yeah. I'm like, that's all you have to do as a trader. You don't necessarily respond just to this, like that open news. You're right. What do you do now? So you connect the dots. Okay. And this is an Asian trade. Okay. Now, we don't know what's going to happen now, but nonetheless. Now, if you're a bear, and actually I'm a bear on this trade. So one of the things we were talking about is that I'm a bear, but I can't sell here. Look at all the support. What am I, an idiot? I don't sell at support. So you got to sell high. All right. So then we get this bullishness. I'm like, oh, I don't like that. Okay. So as a bear now, I need to analyze this area. And at some point, I probably need to be wary of this. I'm going to call this an area of interest. So what if now in the future, you understand what I'm saying? What if, I'm not saying it will, but I'm planning. What if now we come down, then we have a lower high, and then we have this. And then we'll probably have this, and then we'll probably have this. I just planned tomorrow's trade. Tomorrow is Thursday. And I just planned out Friday's trade. Okay. Now, could I be on it already if I'm a bear? Oh, for sure. Okay. Now, is it created equally? No. Would I do the same thing on pound dollar? Yes, I would. Okay. Yes, I would. Would I do the same thing on Aussie, pound Aussie? No. Because right here, right here, we already analyzed this, right, last week. That's a bottom. That's the expected bottom, by the way. Look, we knew this weeks ago. That is the expected bottom. But also over the weekend, things changed fundamentally for Aussie dollar. Cool. Just so you know, and this is for everyone that has not joined FX Bootcamp yet, maybe you should, because this predicts that, and what we talked about last week and this week is that it could, not that it would, that it could go back to this price. Is that a fact? Can anyone back me up on that? Bueller? I believe it's even in the book. I know it's in the training course. The book goes back 13 years. No, nobody here? All right. There you go. It is a pattern. The interesting thing is, right? The thing is, it wouldn't occur later in the month. So if something occurred like this, let's say next Monday, I would not expect the same thing. Well, I gotta go, I guess. Hang on. Yeah, I got a furniture delivery. So anywho, gotta go. But you need to plan ahead, is all I'm saying. And things change fundamentally, so you have to consistently grab data and put it in model. Feed your machine learning model. Feed your algo. Feed your algo. Feed your algo. Okay, you got to stay on top of this. Your algo might be here. Okay, so right now, things are really bad in Great Britain, which means really bad, meaning high inflation, which means the Bank of England is going to have to raise interest rates again, and probably, a lot, 50 basis points again, which increases the carry. So maybe you get long pound yen in times when yen is weak. But we'll look out for the yield curve control. Maybe your Aussie dollar is a big winner right now. It's only fundamental, guys. It's only fundamental. Maybe your Kiwi dollar. Maybe your dollar CAD. Put it together. The rest is technical analysis, bro. What we talked about in the day trading group last night was this, right? This one came back. This is the day trade. I said, even though I'm bearish on this, it could do one of these things first and then come down. So you have sort of a plan A and a plan B. In this case, Asia took it. London also took it. Sweet. Got to buy that buck. Yeah, see, I was a buck. All right, so peace on earth. May the pips be with you. May your profits be above average. Oh, if you're in the oil trading course, I'm doing a lecture today at 4 p.m. We're going to do downstream. And there is something I'm going to show you today that's going to amaze you, especially if you're not American. You're going to be amazed. Peace on earth. May the pips be with you. May your profits be above average. Cheers. Hey, that just happened.